Hi everybody, this is Gary Dean with Sentiment Timing, and this is our free weekly video report for Thursday, January 5th, 2017. I want to start off with a Happy New Year to everybody. I hope you guys had a fantastic holiday and Happy New Year's with your friends and family. And things have been kind of boring over really the last few weeks, and when I didn't really want to just keep sending out videos that weren't really saying anything and interrupting what you were doing with your family. So I haven't really put anything out in like 2 or 3 weeks, but now that is all behind us because we have 2017 approaching, and something that I put out yesterday, I'm not sure if you saw it, that had to do with the roundtable conversation that I had with Woody Dorsey. And one of the things that he's been talking about was that in 2017, he's actually anticipating that we are not going to have one 20% decline. We're actually going to have two. So the thing is that these declines are not going to just be a straight down thing, and it's not a huge bearish call, even though the markets are, he's anticipating a 20% decline. They're probably going to rally back up 20-25%. So there's going to be huge volatility that's coming in 2017. And really, one of the things, we had a conversation today, and we're going to try to do these round tables each week. But he had asked, he said, what type of president do you see Donald Trump? What would you do? And it would be exciting, erratic, and stuff like that. And he said that's pretty much exactly what's going to go on with the stock market. Through the last 8 years with Obama and the Federal Reserve and stuff, it was pretty much a boring market, and we had some sharp declines, but they lasted a couple weeks, and then it was back to the boring market. Well, that's all going to change, and it's good for people like us that are, we're not looking to day trade. We're looking to catch the big moves, and really, when you're expecting a couple 20% declines and 20% advances, you only really need to be in two or three of them for the year, and you'll do very, very well. So let's get started. I have a lot to go over with everything, and like I said, it's going to be a fantastic year. This is kind of some of the things that we've seen play out, and that's how Woody has predicted over 1,400 points in the S&P since September of 2014. So I want to go here and start off with November 17th, 2016, because there's a lot of people, and some of the smartest people that are out there. Mark Cuban's kind of one that that's standing out right now, saying that if Trump was going to win the elections or going to win the president, that he was hedging his entire portfolio because the market was going to crash. And there was plenty of people that were jumping on that bandwagon. And before the elections, Woody's profile was looking for a post-election rally. And I am not going to lie to you, in the back of my head, I questioned it because I wasn't sure if the market was going to crash if Trump got elected or not. And it sure did look like it when, it looked like he was going to be our next president, and the futures were down a ton. But sure enough, by the time the cash markets opened, they came back, and we've seen this rally that has been pretty much nonstop. So some of the things that he put in November 17th. So this is right after the elections, 10 days after. Structural declines remain unlikely until next year. So going in from November 17th, you had December 17th, going, all the way into January, a month and a half. You knew that the market was not going to have any huge declines. So it was going into next year. Now, this topping process may elongate into the Q1 of 2017. That profile allows for a good 3 to 4 month decline. And one of the things that he said back then is, what's the best way to set up a 20 to 30% market decline? And that's spike up to new highs and maybe 2,300, 2,350. When is the best time for that? Early next year. A good decline will occur in 2017. So this is going back when everybody was, yeah, it was a bounce and we thought the markets were going to crash, this and that. And I really didn't see too many people that were pointing out 2,300 or 2,350. And the S&P came real close to that not too long after. So everything is lining up for exactly what he's anticipating. And the reason why I'm showing you this is because you really want to pay attention when he says there's going to be 20% declines, because if you're caught on the wrong side and you're not anticipating when the market is going to decline or rally, anybody that's a reaction trader, they're getting absolutely crushed, because these markets are moving a lot in pre-market, and you're not getting any time to really back out of things. So going back to this Trump low that we hit here, you can see this is a chart that he put out, and this is a long-term sentiment chart. And you can see the majority were always on the wrong side of the market when lows were made, and they were on the wrong side of the market when tops were made. And this is the advantage that you have when you see, when you're able to see how people are feeling about the market. But that's just one thing, because it has to be, you have to know what it means. And that is what he's been doing for, over 40 years. And it's why I've said this often, why some of the largest institutions in the world pay him tens of thousands of dollars for this information. And, we gave you a little tip of his institutional stuff, that with the roundtable when he did the stock bond ratio, which we gave to our subscribers as well. So again, really the whole sentiment thing is, when you have your euphoria, this is not when you want to be buying or chasing. You want to be actually scaling out of longs and building a short position. And when you get into the panic in depression and all that, down here is when you want to start looking to buy. So imagine if these moves here were 20% and then we were getting another 20% up. Most people are going to get stuck right in the middle, where they're going to stay short into here, then they're going to panic and cover, and then when it goes up, they're not going to really make that much. But if you're anticipating when these moves are coming, you don't really even have to catch the entire move. It's if you just catch half of it, you're going to do much better than most people that are out there. So here's our current sentiment, and you can see that we hit we've been hitting some 92%, and we had some 14s, but this really doesn't mean much, because you have to know when to expect a turn. And that's why sentiment is great. You can look at it, but unless there's a structural turn date that is pending, these are just numbers. And one thing that Woody said is, one of the things that he's going to be looking for when this Trump top actually hits is going to be a series of 90, 100% bullish readings. And that's going to be where everybody is jumping on board and are really, buying into this rally. And from there, they're going to pull the rug out, and we'll probably see the start of that 20% decline. So this is the I'm sorry, I just showed you that chart. Did I put two of them on there? I'm sorry. Never mind. Let's just delete it. That was supposed to be the intermediate term chart. So anyway, what I was saying, where when what's going to be taking place with the market 2 months in advance, where the market was going to go up from November until the first quarter of 2017. It gets kind of boring on our end, because how many different ways can you possibly say that the market's going to go up in a newsletter? It's, there was really no big hurdles that were going to be there. We expected a couple little hiccups. They came and went really fast, but for the most part, it's been, just kind of a grind higher, and that's it. So the reason why I'm telling you that is one of the things that we're going to be adding into our the sentiment timing umbrella is we just hired a senior cross asset global stock market analyst, and we get a lot of emails, people asking to do stuff with us, and most of them I just throw away. I'm not really interested. But when you find somebody that's a professional and been in the business for a long time and has a track record, it's somebody that we want to take a look at. And we decided that we're going to be bringing him on board, and these are just some of his returns. In 2015, he did 26%. 2016, 32%. Emerging markets, he was ranked number one. Stock win rate has been over recent years has been 70%. Again, like I said, he's been here for 25 years. He looks for low risk, high reward opportunities. Ranked the number one analyst, and he's worked with Jim Rogers. So the one of the things that's in the email are actually a couple of his stock reports, and one's a long version and one's a short version. We're still going to figure out which one we're going to put in, but for the month of January, we're actually going to be giving you all of these reports, and we're going to be sending them out on Monday and Wednesday. And these are for subscribers, and so the special that we have running is still there, the $99 for the 2 months. And on top of getting one of the best market timers in the world, you're going to get a professional market analyst that's going to be giving you stock reports as far as what to take advantage and make some money on the current market conditions. On top of that, I'm also going to be giving you the free membership to MarketsPath. I do the video reports kind of like this. Give you an idea what I see the market doing on a short-term basis, just based off of technicals. And that's really it. So we have a lot that's going on right now. I mean, I could show you the S&P. There's not, like I said, we could head lower. It would make sense. We could we can see the S&P just absolutely go crazy into the 2300 range. So there's not really much to be talking about on it, and that's why I'm not showing the charts. I don't have a huge strong feel for shorting or going along this market at this particular time, because if the target is in the 2300 range, we're really not that far above that. And if the anticipation is going to be a 20% decline, I'd rather just sit and watch right now and maybe take some of the stock recommendations that our analyst is telling us, and just go from there. Let the markets do what they're going to do. So again, we have about, I think, 13 spots left up for that $99.99. You are going to get these our analysts, these stock reports. They're going to come on Monday and Wednesday just for subscribers. That's only for the first month. So after that, we're working out something with them on how we're going to do this. But anyway, for the first month, it's free. And like I said, for the $99, you're going to be getting the best market timer in the world, as well as a professional market and a stock analyst giving you stock reports on Mondays and Wednesdays, and also the video reports that I do. So with that, until next week, have a great night and good luck trading.